I'm excited to have everybody here. I apologize. This is a placeholder slide. I'll move to the next one. In terms of the group size, not too many attendees here. I think we had about 15 earlier, and so that means it's possible to take some questions as we go. So everybody's muted right now, but if you could use that chat function, Peter and I will try to take a look at that and be able to address some of those questions. I see Andrew has left his hand, raised his hand already. Andrew, it might be a great time. Maybe we can unmute Andrew and see if he wants to ask a quick question to get started. Andrew has lowered his hand. Oh,
sorry, Rick, no, I wasn't trying to speak. It did it automatically on my iPad. My apologies.
No problem. Nice to hear from you. Good to know you're paying attention. So thanks, everyone. My intent here is please use the chat. I welcome questions. You know, we've got time to spend with you. This slide deck will get us through most of the hour, but I am anticipating having a dialogue with you about some of the programs and techniques and tools we're going to go through today. So I do encourage you to use the chat. I would like you to put in questions or ask if there's other types of content you'd like to see. Peter and I are very experienced. Peter's been the CFO of many companies and has worked in R&D tax credits for a long time. We've collectively done this for so long, we don't really talk about how many years of experience as much anymore. So we hope that we have a lot to share. Thanks for saying good morning. We're going to proceed through this deck that is designed to help you understand how government incentives can help you in funding your startup. And so there's a really high level outline if we're going to look at what are Canada's funding programs, understanding how to identify them, how to plan for them and manage your business's cash flow with grants and incentives in mind specifically. And then I'll comment a little bit about why some applicants succeed and others fail. And throughout this whole deck, we're going to talk about a success and a meaningful use of your times when you're considering government funding in the context of other sources of funding for your business. So I'm not sure how many people followed this, but there was a recent federal budget. And before I start talking about how the government gives you money, I always like to put up this graph as a reminder for how it takes some money away to provide these great services. So think of this as two sides of the same coin. You're operating businesses in Canada that are a high compliance type of environment compared to some other countries. So this was taken as a visualization from a budget a number of years ago. But I think it's nice for you to understand that the government gains its income from many different sources. And I hope that this opens your eyes a little bit, but doesn't entirely surprise you. You're all here now running businesses. So understand that the right-hand side of this loonie is a pie chart explaining all sorts of other types of tax that if you're an early stage business owner, you might not be familiar with. Everybody has paid personal income tax who's on this call. At least I would expect so. And then towards the right are some taxes you may not have enjoyed, but as you keep operating a business in Canada, you're likely to get some exposure to them. And so, you know, you can see corporate income tax there, the 14% piece of the funding pie for our government. Goods and services tax, HST and GST. And we'll talk about that a bit more in a second. Getting into some more exotic types of taxes you may not have heard of, non-resident withholding taxes, custom import and duties, and excise levies. And there's a whole other story there as we get into withholding taxes and businesses doing business internationally in particular. And then finally, employment insurance premiums. This is the portion of employment insurance that businesses pay, not just individuals. So you can see the government, you know, at the top, I skipped Crown corporations as well, gets money from a variety of different sources. And while that might seem diverse, I can assure you that as we switch to the other side of the coin, to government incentives, you'll see there's many more programs to go through. But just before I move past this slide, I always like to point out that every business has to file a corporate tax return. And when I meet with the earliest stage businesses, the biggest source of funding for them from the government is simply filing their goods and services or their HST tax return. This is deflating a little bit maybe for some, but understand as a business, when you purchase things, you're paying HST. and you can recover that HST cost, that 13% of your expenditures. So for everybody on the phone here who might have spent $100,000 so far in their businesses purchasing goods in order to get set up to operate, perhaps to do R&D, understand that's up to $13,000 that could be recovered right away. So just filing your HST returns is a great idea. But without further ado, we're going to flip to the other side of the coin. We're going to go away from taxation and into what is available to your business from a government incentive perspective. So if we look at what's incentivized, there's 5 very broad categories that through the last 5 to 8 years have seen continued focus. By that I mean there's many programs that fit into each one of these buckets, so much so that the visualization is going to convey here that they're overflowing. So there's an overflowing amount of subsidies for technology development offered by our Canadian government. So if you're a business on the phone here that does any type of R&D or technology development, understand it's very likely there's an incentive for you that you should be aware of. The same thing with hiring and training. We see multiple programs announced every budget focused on hiring and training. We're going to talk about some of them today, but as a business, as you start to staff up, and we talked about that salesperson, hiring the right first salesperson, there's certainly incentive programs that are on the edge of a salesperson we're going to talk about today. Understand you might get a subsidy for hiring that first sales employee in your business, and there's other indirect ways to cover their costs as well. So you'll see 4 programs today touching on hiring and training and sales. Moving along through these buckets, business expansion. Let's say you're an operating business and you'd like to do more. Even better if you're a profitable business that's growing, and what's limiting your growth is access to capital. There are absolutely government programs to help you expand a profitable business more quickly and with a lower cost. So instead of having to go out to raise another round from a VC, there's debt solutions available from our Canadian government that'll help you scale more quickly and in the end more affordably for the shareholders. There's export market development. Again, we're going to highlight one particular program and briefly touch on others today that are all about international sales, reducing the cost and barriers to you selling abroad outside of Canada, be that electronically or physically shipping boxes, both count as export. Finally, sustainability and energy efficiency. The recent federal budget had some minor changes here about new tax credits around sustainability and energy efficiency. So if some of you are in the business of selling equipment that helps with carbon capture, well, your clients now will benefit from a tax credit when they purchase your equipment. And this is an interesting way to look at grants and incentives. Maybe they aren't all just for you. Perhaps some of those grants and incentives are for your customers to make it easier to do business with you. So generally speaking, 5 buckets, dozens and dozens of programs covering each of these buckets. So if these are behaviors you're going to do in the next several years, you should have a plan to utilize grants and incentives. Now I'm going to pause for a second to say I absolutely think you should have a plan to use grants and incentives. That doesn't mean every business should use every grant and incentive. That would be overwhelming, and I'm going to put up a slide now to help explain that. The federal government has created a really remarkable tool, and that tool allows you to identify grants and incentives that are offered inside of Canada. So understand that's many different types of grants and incentives all across Canada. And I checked yesterday before the session, there's 1,629 programs listed there. That's an overwhelming number. Of that 1,600, 1,300 and some are accepting applications right now. And if we filter those geographically, because I believe everybody here is in Southern Ontario, we drop to 663 open government incentive programs accepting applications today. Obviously more than we can cover today. So like some classic proverbs, I've got to teach you how to fish rather than feed you. So while we're going to do some feeding, we're going to highlight specific programs. One of the best things you can do today is visit this website and understand how to use this website to monitor grants and incentives that are good fits for you and to identify new and emerging programs that fit your unique business profile. So I'm going to be a bit dangerous. I'm going to paste a link in the chat that goes to this Business Benefits Finder application. I'm going to tell everybody, check out the chat, maybe open this in another tab. Try not to get sucked in too much. The screen's changed a bit, so it's going to have a notebook on the right instead of this visualization, but I'd like everybody to locate that and have this available as a tool. I don't want you to use it too much right now. I'd like you to come back and focus on me, but take a minute, click the link, open the web page. You should see a Government of Canada banner on the top, a notebook on the right, Business Benefits Finder. And in the middle of the page, you're going to see a statement, I'm looking for, and there's a drop down. And from that drop down, you can pick all sorts of things. So that's the point I'm going to ask you to pause, because if you start answering those drop downs, you're going to begin a wonderful dating game. You don't see the link in the chat. Okay, let's try that again. Oh, my apologies. I did post that only to posts and panelists. So A+ for Sarah speaking up, and Marcia, I think you can correct me on the pronunciation. Everybody, do you see the link now? If I could get a yes from someone, I think you should see it in the chat. Thank you, Alex. Awesome. Appreciate it. I got 2 yeses. That's great. So let's click that link and just open it up. Everybody take a minute, because I'm not joking when I say this is some of the most valuable advice you're going to get today, is to learn how to use this tool properly. Awesome. I'm going to assume that most people have opened up that web page. And now, if you start answering the drop downs on this page, you will begin a dating game to match your business with particular grants and incentives. You're also going to be able to sign in, creating a profile for a business. The profile is linked to an email address, and receive updates. Later on, you'll be able to create favorites on star programs to receive updates on them. It's a particularly great tool. For now, we're going to proceed to understand the dating game I'm referring to. Creates a story matching your business with incentives. And I'm going to read you the story I've got up here right now. So I filled out a story as though I'm starting an internet service provider in Northern Ontario. You can see that in the paragraphs below. It says, I'm in Ontario, specifically the Northern region. And what I need most is funding, loans, capital investments, and basically everything. I checked every box. But I'm not interested in getting out of bed for just $5,000 from the government. No, I have a minimum threshold of $30,000 in order to get a search response. And so I think everybody gets this is a filter you're building, a query upon the database of grants and incentives. And so when I put $30,000 there, is just like I did with the Northern Ontario region, we're filtering that down. As you saw earlier, we went from 1,600 to 600 in Ontario, and we continue to build up and gain momentum as we apply other filters. And perhaps your main goal is to buy or lease equipment. And so if that's the focus, the biggest problem facing your business today, by all means, choose that filter. I'm going to go on to say that we're in the broadcast and telecommunications industry. I have chosen not to say whether this is the ownership demographics about the business for this answer, but I encourage everybody here to list every possible edge you get from a demographic perspective. So if you are a new Canadian, you should indicate that in terms of the type of business owner and employees. If you are a woman-led or woman-owned business, you absolutely should fill out this drop-down, because it will change the programs available to you as well as your success rates. Thanks, Sarah. I'm glad the only dating tool you use sounds like fun. I hope you'll use it a lot, actually, and I hope you're picky and you play with all the filters to get the right matches, everybody. You can see here, 10 employees strong, incorporated, and for-profit. To round out these features, and a couple others, I'll guide you to say this is a tool I want you to experiment with to help identify the right programs, but understand certain values you're going to enter here are critical. Generally speaking, if you're not yet incorporated, the majority of these businesses programs aren't going to be available to you. And generally speaking, if you have no employees, there will be limits on the number of programs available to you. But what you can see in the screen share right now is we've, through these filters, reduced that 600 and some in Ontario down to 3 sources of funding that are matched with what my business actually needs right now. And you can see 8 sources of loans and capital, 1 potential partner, and 5 people willing to give me advice. So I think this is a wonderful tool, and I encourage everybody here to use it. I'm going to teach you a little bit more how to use it as we go through this deck. We're going to move on for now, though. Thank you very much. And think about the sources of funding for your business. Now, you'll see something at the top. I have to stress, every business should be funded through their sales. That's not on this chart. It's intentionally left off. But I want everyone here to understand that at some point, your business must be financed from sales. I would really like that to be early in your business. I was also an entrepreneur. I've started and been a part of many early stage businesses. I can tell you that every single one of my businesses started with a sale. Did not start as an idea. It started because someone was willing to pay us money to do something. And so for me, every business I started was a sales-oriented business, sales-driven business. But I don't want to be ignorant to say that other companies start differently. And so there's other sources of funding. You can see along the top, friends and family, angel investors or VC investors, and perhaps partners, corporate partners might initially give you seed capital to get started. That's all up in red. But generally speaking, that's what we call dilutive financing. You have to give up shares or a percentage of ownership of your business. And that's like giving up future profits as well as control. So when you take on an investor, they typically are taking something back. And part of that is future profits and control. That's what I mean by dilutive financing. What's new in the focus of today's presentation is what's going to sit in the middle. This is notable sources of funding. I've got Canada's previously largest funding program, the SR&ED tax credit program. We'll talk about more. We've got loans and grants in the middle here as well. And I've sort of spaced these out intentionally. So consider SR&ED a sort of tax credit. We're going to talk about those. Loans often underrepresented in startup financing. If you can get a loan from the government that doesn't bear any interest, you're much better off doing that than you are selling 25% of your business to an investor in the long run. Now, understand those loans aren't free. They come with conditions, but I hope that you'll consider them today because they're generally speaking non-dilutive. You still own all of your shares. This concept of dilution, I hope it makes sense to everybody. I want you to continue to own your business, and government sources of financing are one way to help buffer what you lose through dilutive financing. They won't replace it necessarily. You'll often still need to work with an early stage investor, but they will help you retain more ownership. So this is another pie chart, pie graph, and there's a lot written here. And so if we want to take those grants and incentives and split them up a little bit to understand how you actually access them or what they're shaped like, you can look on the right. And so I'm going to try to lead you with my mouse if you can follow it. 70% of the government funding for businesses comes in the form of a tax credit. And that means at the end of a year, a business files a tax return and claims things in that tax return. They might claim they hired a co-op student. And every term worked by that co-op student might entitle them to a $3,000 refund. Now that's a refund. It will come back to you as cash, but understand the only way you get co-op tax credits is through your tax return. And so that's why I'm calling it tax credit support. It's an incentive program offered by our Canadian governments, but it's only through your tax return. 70% of the funding flows through your tax return. Earlier when we talked about needing to be incorporated, this is why. The vast majority of the funding is available through your tax return. Now, that portion of the pie is shrinking. Every budget, we enlarge the other pieces of this pie. And next up, I want to point out is non-repayable grants and contribution programs. 18%. This is the idea where you're agreeing to do something the government would like you to do in exchange for some money. This is likely over several months. So you develop a plan. The government agrees to help fund that plan, and you don't have to pay them back as long as you actually deliver on that plan. Next wedge in the pie is the 5% repayable contributions. These are loans that may or may not bear interest. The concept here is that we'll loan you money to expand, help your business expand, and you'll pay us back perhaps through future profits, but you're only paying back the principal. So if you borrow $300,000 now, you might have to pay $300,000 back over a series of 5 to 8 years, but you will only ever pay back $300,000. It's an example of a repayable contribution, and some do have royalties, other mechanisms, but generally speaking, non-interest bearing. We're going to gain some speed here just to say that there's procurement programs from the government. That's a growing piece of the pie. We're going to talk about 2 procurement programs before we're done. And finally, the government itself is a consumer. It often pays for technology demonstration. So to summarize, I hope you're still with me. 70% of the funding programs, you do the behavior, you make a claim on your tax credit, looking back at what you've done to receive the benefit. 23% of the programs, you're pitching the government to fund a program. You're pitching them just like you would an investor to say, I want to build this new machine. If I have this new machine, my business will be more productive and efficient. Will you help pay for me to build this new machine? The government might say yes through a program like the Industrial Research Assistance Program or the Business Scale Up and Productivity Program. So those are looking ahead. I'd like you to consider tax credits an entitlement where we plan for it, but we always claim it in retrospect after the behavior's done. We already hired the co-op tax credit. That's when we get the credits, the money back for the refund, versus looking forward. Appreciate people rolling through this education with me. We're going to start edging into a little bit of terminology that'll help you decode things you'll find on the website I asked you to open, and that's something called the technology readiness level. So this isn't in the dating game, but you'll see it when you get the end response. And it's a 9-point scale designed to measure how mature your technology is. It has its roots in military procurement and in NASA when we're talking about introducing new technology, and you're talking to the government procurement offices. Let's see, could I put back the link to the website? Yeah, absolutely. There you go, Emmanuel. So what I was talking about here was technology risk or readiness level, or risk levels could be a good substitute. And understand a number 1 is like the apple hitting Newton on the head. Someone has an idea about gravity, but they don't have the laws written. They haven't done any experiments. They haven't worked it out in a formula on a whiteboard. It's just an idea. If you mature to technology readiness levels, let's say 3 and 4, you're starting to prove things work in a lab environment. That's like applied research. Think what a professor does at a university. If you're at TRL level 6 or 7, you have a beta that customers can download, and it mostly works. If you're at technology readiness level 9, you have shipped a product in volume and have operational support to deliver it, manage returns, teach people how to use it without any supervision. It's a very mature product. Understand that 9 is you're able to do volume expansion of your business or of this technology. And so when you look at government incentive programs, they're going to say this is TRL level 4 funding, which means it's before you have a beta. So you'll be doing work to develop technology for the government, but there isn't an expectation of a shipping product coming out as a result of the funding if you're looking at TRL level 4 funding. If, on the other hand, it says it only funds TRL levels 7, 8, and 9, that means the funding probably won't pay for any R&D. It will pay for you to have mature business processes to sell the technology and deliver and implement the technology, not to create the technology. So TRL levels, something you need to learn to access and navigate Canada's financial systems. Now, along the bottom, there's an implication, everybody, of the risk profile. Early on, does the technology work might be the biggest question. And as you ramp up through the TRL scale number, the governments believe that the risks you need to manage are financial and market-based. So who does what? There's a concept that the Canadian government has that it fills two gaps in the Canadian funding landscape. So some governments pay for fundamental research, they pay for universities. That's not necessarily for businesses, but there's ways for you to tap into that funding by collaborating with universities. But the big source of funding is this technology development and demonstration, going from pilot to full scale. They call this the pre-commercial gap, and many of the Canadian programs fit there. And by the way, this left to right progression you're seeing here is along the TRL scale. So most of the funding, you have to understand, is for technology demonstration and development. You'll note that venture capital and private equity has a little bit early stage investment. Those are your angel investors on the far left, more so on the right once you're expanding. There's also a pre-IPO gap. When I talk about business expansion funding, that's targeting the pre-IPO gap. So you have a business, it's a viable business, you're trying to scale it. So these are the two pain points the government tries to address through grant and incentive funding. Thanks for rolling through. That's 1/3 of the presentation down, and we're going to gain some speed here. So there's a little bit more education to go through before we get to specific programs, but we're getting close. So we talked about what's available. Everybody has that tool, and you've now been equipped with the information to process and understand what is listed on that tool. Now we're going to talk a little bit more about the management of these programs. And again, we're going to look at grants versus tax credits. And I think everybody remembers grants, we look ahead, they're a competition, like we're pitching an investor or a customer. Tax credits, we look back. From a cash flow perspective, if this is your bank account and you have $20,000 in the bank account, the way grants pay out is once you're approved, you might submit monthly funding reports and receive a top-up every month. So your burn rate starts fast, slows down when you have the government matching 50% of your expenses, and then accelerates when that program's over. Understand the point you're going to end up with grants is the same point with tax credits, but for tax credits, it's a lot more scary. So if you're a finance person, this should be a little intimidating. You're going to spend a lot of money. Your $20,000 will start disappearing quickly. And because it's a tax credit, you may have to go through an entire business year, 12 months, file your tax return, wait some months for it to be assessed, and then the refund comes in as a lump sum. Everybody got that late peak here? That's the one-time cash refund from the government. Tax credits are great, but they're late. You need to have a funding plan to get you through 12 to 18 months until that tax credit money comes in. This is the same slide. I've just layered on some government programs that people may have heard of. We're going to talk about these in more detail. And again, I think a recording of this and the deck will be circulated later, so you can review this at your leisure. So we need to talk a little bit about how you identify these opportunities. So that site was a great start, but there's other ways you need to think of your business to really utilize it properly. And we're going to look at specific example programs that fit these categories. So the first is there's certain programs that are only interested in the type of business or product. You remember on the dating game, I was in the telecommunications or broadcast industry. So that's a match for number 1 on this chart, or on this bulleted list. Things get a little bit more tricky as you get to points 2, 3, 4, and 5 here. So matching the type of business you do, you're in the kitchen cabinetry business. That should be something you can find in a drop-down to match up, same with broadcast and telecommunications. But some of you may struggle to match the type of business with the options available in the government. For you, you have to look at number 2 and number 3 here. So the technology in your product. So really quickly, the kitchen cabinet business might develop low emissions painting techniques for their cabinets, or they might develop new ways of milling pulp and paper or MDF boards. Those are technologies inside their business. So they might use Canadian wood products and more efficiently mill and process those. So perhaps they're looking for forestry related funding, because that's something that's a part of the technology in their business and their bill of materials production process. Perhaps they are looking for environmental sustainability funding because of the low VOC paints that they're using. So, or perhaps natural varnishes are being procured in some way. And so they might look for those types of programs and understand they might not find the option in the drop down. So there has to be another way to sort of get to these programs by positioning or searching through the database a little bit differently, understanding your data, your business from the top to the bottom. The people who produce your product is next, and finally location of business, customers, and investors. So we're going to go through examples, and I'm going to apologize, everybody. You're going to have to use the chat. I'm going to go pretty fast through these examples. You may not have time to read everything in the slide, but we're going to look at specific programs, and we're going to spend time on some of Canada's largest programs. So first up, Innovative Solutions Canada is a government procurement website. They launch challenges. They say that we would love to buy technology that does this, but we can't find it on the market. And they ask Canadian businesses, will you build it for me? Many of my clients have applied for this program and been successful. So the challenges are defined by the government, and it's a staged application. You first get $150,000 to produce a proof of concept. What's great about that is that covers 100% of your expenses. So if you see a challenge posted that's similar to your business, well, then this is a great way to have $150,000 of your R&D paid for to produce, again, a level 4 proof of concept. You're not producing a product yet for the government. You're just doing some R&D for them and sharing your results. You still own the IP. They cover 100% of the costs. And the real win with this program isn't even the $150,000 to do the proof of concept. It's setting you up to actually build a prototype the government could purchase someday. So stage 2 funding could be up to $1 million. It's been as high as 2 million in some cases. And that's to actually produce the beta or a prototype the government can evaluate. And understand that after that, they actually move into procurement where they buy the product from you. So this is a progression from early stage R&D to something you could sell to the government or others, all the way to government procurement, which means your business, if you have a great fit with ISC, could almost entirely be funded through this program exclusively. It's one of the very rare ones that does that, but understand that the fit isn't always there. There are other programs they offer called the testing stream, as well as the ideas programs that I'd encourage people to look at. But it's a unique program for you to evaluate, because if you see a challenge posted to the ISC challenges that matches your business, I strongly encourage you to look at it. Previous challenges, first responder decision age, thinks of how we help police and firemen make decisions. Improved logistics, biotoxin detection, improved sensors of things floating in the water, all sorts of interesting challenges posted. New ones coming out every month. Remarkable program. Next up, I have to talk about the R&D tax credit program. We're going to spend a few minutes here. I'm curious if anybody in the chat could tell me, have you heard of the SR&ED or R&D tax credit program before? Curious how many have. Let's try to make this slightly interactive. Generally speaking, it's a $3 billion program per year. So that's why we're going to spend a bit of time on it. And it's all about the technology inside your business. Remember the example I gave of kitchen cabinets with the low VOC paints, or the better ways to mill MDF boards? Well, that kitchen cabinetry company might be doing great R&D on that type of natural varnish that perhaps it's derived from a plant or a beetle or something like that, and they might be doing a ton of R&D, and this is a way for them to recover their R&D expenses. So this program has been around for a long time. For perspective, $3 billion is a lot of money from a government funding point. 20,000 applicants every year ask for part of that $3 billion, and we'll explain how it works. And for context, the SUS funding, everybody, we just got through COVID-19. It's been a couple of years now, and the government spent $96 billion on COVID-19. So that was an epic investment, but this used to be the largest government funding program at $3 billion. So that's some fun commentary there for you. But hey, good job with the poll. That's awesome to see. So The nice thing about the R&D tax credits is for Canadian controlled small businesses, which I think everybody on this phone meets that definition, you can recover 60+% of your R&D expenses. We're going to keep coming back to that figure so you understand how important it is. 60% of your R&D expenses can be recovered through your tax return. Spend $100,000, get $60,000 back every year. That means that from an initial seed investment, let's say you deal with investors or your friends and family and they give you $50,000 in year one, you recover $30-some thousand of that $50,000 you spent on R&D back in year two. And with $20,000 in sales, you've got the same $50,000 budget again. You claim it again and get another $30,000 back. Everybody follows me that by the end of 2 years, your initial $50,000 you invested has been washed through the program twice, and it's now generated $60,000 from the R&D tax credit. So we're going to look at that again and understand that on a multi-year model, R&D tax credits are incredibly important because the impact of 60% recovery of R&D in a 5-year plan is amazing. So we won't have time to go through all of these. Some of these slides you're going to read on your own after, but look at the chart on the right. 66% of salaries can be recovered, and of that 66, 92% of it's refundable, which means you get cash back from the government. The rest is a tax credit only, so it stops you from paying income taxes as a business, which you don't have to worry about till you're profitable. So if we multiply 92 times 66, we get the actual cash amount that you get to recover every year. You can see there's a best case, and as early stage startups, you're all in the best case. So this is the biggest program to help subsidize early stage companies that are doing R&D. You can see materials consumed or transformed, and contractors have lower rates of return. That's Canadian contractors. Generally speaking, we're going to talk through the visuals, not the text, everybody. Again, tell me if you need to slow down. And I'm sharing the poll results now. I hope I did that right. Looks like about half of you are familiar with the program. But generally speaking, the program doesn't pay for your business R&D. It pays for a subset of that, a technology-focused R&D. So it won't help you understand your requirements or see if your users like this new varnish, but it will pay for you to do the development and testing of this new varnish or this new XML parser or this new web-based front-end software you've developed. So consider it a subset of your overall business operations, focused on the experiments and analysis that your team is doing. So generally speaking, to say this again, the program is reviewed. If you're trying to claim accounting software improvements, you're probably doing it wrong. If you're claiming the technology inside of accounting software, you're probably doing it right. So if you're improving new techniques to parse XML data or import or export different types of file formats or changing your data model, any costs related to that technology-based investment is likely eligible. So I give you an accounting software example there. Just like the kitchen cabinets, again, you don't claim a better kitchen cabinet, you claim a better varnish or milling technique. That's why it's the technology inside your business, category number 2, to identify good expenses. This is just a quick summary of all the expenses that qualify. So labor engaged in the experiments or analysis, and people supporting that, doing data entry, loading a feedstock into a machine, or supervising people doing the experiments, are all the types of labor you can claim. Any materials consumed or became valueless in the process, and those transform because they're now a prototype your company has. So that means if you're a bunch of engineers and you built a new machine, you're trying to make this machine work properly, and it's currently an object that's in your shop floor, it's not with your customer, then the cost of building that machine is a material transformed and can be recovered at some 40% of your cost to produce that machine. And then finally, subcontractors on the right. Note everybody, you get a lot less money for subcontractors than you do for labor, so I won't spend a lot of time there. To make a claim for this credit, you have to have pretty good notes. You're going to have to write a 7-page form in your tax return. Part of it is essay answers explaining the work you've done on technology, and you can hire people like Peter and I to help you write these forms. We do help companies file government incentive applications, and SR&ED tax credits is one of the more difficult ones to do on your own. But what I'm trying to drive you from here is you have to have a great evidence-based timeline, then you write a story to the government, and that's what lets you recover this money. The government's also going to ask you to keep records, notebooks, timesheets, test results, photographs, and things like that to prove that the R&D actually happened. So it's a little bit higher compliance cost, but that comes with that incredible benefit. We're going to move past some of these slides to come back to this general guideline again, because I want to stay on track for everybody's timeline. We talked about the different ways to identify government funding. Just for perspective, we've been through 1 and 2, and we're going to proceed through the rest now. And so what that means is, generally speaking, we're going to dig into the people who produce your product, the location of your business and customers, and other funding for stakeholders, investors, and why companies sort of succeed or fail. We are doing pretty well in our agenda, so I'm going to take a break. I'm going to top up my coffee, and I'm going to ask everybody to put questions related to the R&D tax credit program in the chat, because now is a great time to do them before we move on to talk about other government programs. So anything you've heard to date, you want to have a discussion about, you can come off mute and talk to me, or put your text in the chat. I will be back in 30 seconds. Thanks, everybody. Okay, thanks for your patience. Got a couple of questions we're going to go through. I'm going to pick a few off, but by all means, keep asking them. And then everybody, raise your hand if you would like to come off mute and actually just have a discussion. I think we have a small enough group that we have budget and time to do that. So I'll take the text questions first. Sai, is there a limit to the amount a company can get as a tax credit? Not as a tax credit. The great thing about tax credits are they're an entitlement. And if you did the behavior, you earn the tax credit. Generally speaking, that happens without conditions. So you aren't limited in the number you can apply for. But I think you might have been asking about the amount of money you get back. And so government programs do interact, and this is a little bit related to Sarah's question. Let's say that you received a hiring subsidy, and that paid for half the cost of an engineer's salary. If you claim that same engineer through the R&D tax credit program, through this SR&ED or SR&ED tax credit program, you have to disclose the overlap between these two programs. So assuming that same engineer's time is claimed 100% for R&D, what's going to happen is when you calculate your R&D tax credits and you disclose that 50% wage subsidy that was received, it will affect the amount of money you get back from the R&D tax credits. It will reduce it, but not at 100% rate, at an effectively a lower rate. And so it could be a little confusing to do on your own, but if you'll just take my word for it, for now, that $50,000 that you received in terms of a wage subsidy would lower your R&D tax credits by maybe $30,000 or so. And so we could work through those calculations in a one-on-one session at Innovation Factory. If you're a member there, you can meet with Peter and I, and we can do some specific scenario modeling. But just understand government programs do interact, and R&D tax credits recognize other forms of assistance that overlap with them. So again, a hiring subsidy for a salesperson unrelated to R&D might not affect your R&D claim at all. Now, there's other types of funding programs we're going to talk about in a minute. I'll mention if you have a project-based funding from Ontario Centres of Innovation, they're coming up to speak soon, or the NSERC's IRAP program, Industrial Research Assistance Program. That's where you say, I'm going to build this new thing or conduct this R&D, and it's a multi-month plan you file. The government, for those types of go forward grant funding programs, typically has a cap of 75% of government subsidies. So you may apply for multiple grants and tax credits, and altogether, you have to bear 25% of a project's cost. And those restrictions are per program. They're not all 75%, but SDTC, Sustainable Technologies Development Program, and IRAP in particular, two of the largest ones, have this concept of a 75-25 split. You must bear 25% of the cost directly. So you can layer or stack government programs up to that 75%. If you go over, all that happens is one of the programs reduces how much it pays you. So assuming you're being forthright and disclosing the overlap, there's very little penalties associated with overlapping or combining programs. Sarah, I think I answered your question, and Sai, I think I got your two questions. If either of you want to ask a follow-up now, do you want to do that?
Can I unmute myself? Am I speaking? I'm speaking. Okay, I see myself.
Yeah, we can hear you.
Yeah, awesome. Thank you. So one of my co-founders actually had this question. It was around whether we can use a loan to pay for something and then still get tax
Sure
credit.
can.
Okay, cool.
I highly recommend it. You know, especially if you already have the loan. Being a bit silly there. Thanks. I think I'll move on to other people's questions if there aren't any others. Sarah, I'll mute you again. I hope that's okay. Feel free to unmute yourself or use the chat. Reza, did you want to, Reza, take it away? I think you had a question about forms that companies have to fill out for R&D and how you can do this. So I'll just, I can't hear you, by the way, so I'll just ad lib on that for a second. Absolutely, there's a guide to filling out the forms. It's called the T4088 guide. Our government has webinars to teach you how to do it yourself, and will provide some limited services to coach you through preparing a form by yourself, but they say you're supposed to start building it on your own. Again, the vast majority of applicants use a professional firm to help them with their application. You still can do it by yourself. You'd be in the 20 to 30% of the population that would do it themselves. It's possible. There are resources to support you doing that. And I would say that if you're a member at Innovation Factory, you should take some office hours from myself or Peter Wright, who's again with me here today, to help coach you through that and introduce you to the forms and guides. I won't do that live today, but if you feel like you're up to Googling the T4088, or Peter, if you have other information you want to post, I guess I can put the link in for the T4088 guide in the chat. That's the government's guide to answer the tax schedules you need to file to prepare an R&D tax credit form. Again, if you Google SR&ED and withincanada.ca, you'll find lots of government resources there. Going to keep moving on to other questions. Andrew, good question about losses. Yes, let me try to explain this. Tax credits come in two forms. Refundable tax credits. So let's say your business is losing money and it's not paying any tax. A refundable tax credit comes back to you in the form of a check, just like you made a sale. It's treated just like you made a sale to the government. The sale was your R&D services. You claimed it by claiming this R&D tax credit program. So if you spent $100,000 and you're entitled to $60,000 back, the government mails you a check for $60,000, even if you're a money-losing business. Now, if you're profitable, what happens is you're supposed to be paying tax. So there's corporate income taxes that are maybe 14 to 26% of your income that's above your costs. That's just normal business taxation, everybody. So don't get too worked up about those figures. But understand, if you're a profitable business, you pay tax. If you have taxes owing, the government always pays itself first before mailing you that refund check. Second, if you have non-refundable tax credits, you build them up every year. Let's say you are a tech startup here on the call, but you're foreign owned. You're actually owned by Samsung. You're a small research division. They've spun out because they like your work. Being associated with a big foreign controlled company means you don't get refundable tax credits. You only get non-refundable tax credits, and those are only useful to prevent taxation. So you don't get that check coming back to you. Now, once you're profitable, even though you're owned by Samsung, a big business, you'll have built up through R&D tax credit claims as sort of a tax shelter in the form of non-refundable tax credits. They can be carried forward at least 20 years. And those will prevent you from paying tax once your Samsung-funded innovation comes to market and you do become profitable. Andrew, I'm not sure if I answered your question. I think I did. Any follow-up for you, Andrew? Awesome. Okay, as a startup, when can we request grants and incentives? Right away. Understand that just like pitching an investor, you're competing for grants and incentives. So you have to write a better plan than somebody else. But we're going to talk about programs next that you could start applying for, in some cases right away. If you think you can give an intern a great work experience, perhaps the government will pay half of that intern's salary, and that would get you started as an early stage business. Now, assume, to do that, to receive this funding to hire an intern, you need to have a stable business. You have to have a plan. You have to have people they'd work with and who would mentor them. So when can you start applying? The answer is right away. There's no barrier to entry other than the program specific requirements. And generally speaking, incorporation. You should be an incorporated business to apply for most of these programs. How do we identify the right manual? Oh, sorry, a question there?
Yes, I wanted to know actually, how do we identify the best consultant to help us fill the R&D form? Because I've been contacted lately by several people, and I was wondering, I'm like, this is starting to feel fishy. Why are so many people like calling me and telling me, well, they can help me, and they've never called me, and they found my information on LinkedIn, and then they told me that they can help me with getting money with the government, and then I just thought it was a little fishy. And one of which that I found that I spoke with, and I was like, okay, this is very weird. And then they take a percentage of what you receive before they reimburse. So it was all weird. So I would like to know, how do we identify the right ones from the not so good ones?
I'll try to answer that, and then Peter, if you're on the line, I'll let you speak up. So first, I'll be really honest. That's what I do for a living. I'm a partner at BDO. I have a team of about 12 full-time people who help with that locally here. I live in Waterdown, Ontario, and I went to McMaster and had my first tech startup. So I'd say traditional business networking is a good place to start. And I'm being a bit selfish. I'm here giving you the presentation. I'd say talk to me first, but understand, apply the same test. Find out where the humans are. Do they volunteer at Innovation Factory? Good ones give presentations like this. That's right. This is volunteer time. But I'd ask for some community tests through other networks, because a lot of people use R&D funding. You should be able to ask around at other businesses what their experiences are like. So I'd say business networking first. The contingent arrangements, success-based payments are normal in this business. They're not required. You could pay people hourly or a percentage of what they help you get back, like a 20% success fee is very common, or less. But I don't know what else to tell you. Common sense. There are fraudsters, so there has been. We looked at the forms. You have to submit evidence. Does that make, or you have to say what evidence you have in a checklist, and the government does check to see you have that evidence, because there were people fraudulently filing claims. They had business expenses but didn't do the R&D, and you're right that there's a little bit of an underbelly in this industry. You want to deal with people that are professional. I don't know what else to tell you. As taxpayers, Peter and I were profiled too. So if you're dealing with a big public accounting firm, understand they can't afford to have a bad reputation. The CRA would provide feedback quickly if we were doing something untoward. I'll move on from that question. No, thanks, Sayla. I feel too much.
Thank you.
So I think we're pretty well through the questions. Thanks for being an interactive group. Let's keep going off, and no problem for those who are dropping off. We're going to keep going through these other programs, and if anybody does need to leave, by all means, walk away. I've alluded to government programs, grants and incentives a number of times. I just want to be clear. Can everybody see the screen just fine?
Yes, Rick, we're good.
Awesome, thanks. Okay, so the people in your business, really quickly, there's 4 government programs that you might be interested in that I've chosen to highlight here. And these are Googleable, and they're all indexed in that directory we opened to start, remember. The Youth Employment Program is a grant provided by NRC and IRAP, and it's available to businesses that are a little more established than a startup. So think if you have some employees, this will add an employee. And it will pay 50% or up to $30,000 of a recent university or college graduate salary who's going to join you to work on an innovative technology project. It continues to be well funded and refunded, and I would encourage everybody to consider this. It might not be your first hire, but it should be your second or third, assuming you're willing to hire a recent graduate. So the idea here is you're giving them their first time opportunity working full-time, applying their expertise in the right type of innovative technology project. Next up, I mentioned co-op tax credits a number of times. The only cautionary tale here is they have to come from an accredited co-op tax credit program, and you can ask the university if they will give you a certificate for co-op tax credits, but otherwise it's a 30% subsidy. They have to be around for a minimum of 4 months, but if they're around for a year, you get up to $12,000 per. Digital tech internships, very similar to the Youth Employment Program, just focused a little more narrowly on specific industries, up to $24,000 in cash and $4,000 to train your new employee. And Will Digital, yet another one, 50% cost for hiring a student, capped at $5,000 or 70% and $7,000, depending on the demographics that student fits. If they're a visible minority or otherwise disadvantaged, there's a little more money in it. That's true of many government programs. So really quickly, lots of hiring incentives. May not be your first employee, but a great target for your second and third, certainly. And perhaps your first employee, depending on how many founders are working full-time in the business. We're going to keep going on here to talk about other types of incentives. So now we're going to push a little bit away from people and closer to academic collaboration. So MyTax is another government funding program. Think of it as like a supercharged co-op program, but now you're going to borrow a PhD or a master's level student who's going to leave their academic career and work for you temporarily for 4 months. So if you genuinely need expertise you can't afford, you might be able to borrow a PhD in that specific field for $7,500. And they will work for you for 4 months for that amount of money. So in terms of cost savings, if you would have to pay $100,000 or more to hire the actual machine learning expert you need, this is an incredibly affordable alternative to draw forward expertise. Don't think of this as the people who will dig holes for you or program basic things in your new app. Think of this as specific skills you'd introduce to your business. And MyTax has many other hiring programs. It's another well-funded program you'll learn more about. I think it's uniquely positioned to give you expertise, as is NSERC, and apologies, I have OCE here. That organization is rebranded to OCI, and they are presenting to you soon. There's many OCI programs. I'm choosing to highlight the ones right now that are vouchers for innovation. Effectively, you collaborate with the university, you pay them some money, and the government pays the other portion of the money to the university to do a research project on your behalf. So if you were going to spend money doing a material selection job, in the sense I have a product that works great, but I can't figure out what material to use for the enclosure, this would be an example of a question you could put forward and ask a university and NSERC or OCI to co-sponsor or pay for half the cost for the university to tell you what material you should use for an enclosure of your product. Again, this shouldn't be necessarily your core IP of a business. It's a great way to outsource a problem. Any questions so far about academic collaboration or employee hiring subsidies? Okay, we're going to keep going. If you are hiring many people and training them, there is notable training programs. The Canada-Ontario Jobs Grant is one I'll highlight really quickly. It's a priority is given to applicants who are creating new jobs. The idea here is the cost of third-party training you're going to give your new employees will be subsidized. So this isn't the same as paying you to train them. The idea is I'm going to have to hire employees and I need them to go through training in order to start working for me. So for argument's sake, a truck driver needs to learn how to drive a big rig. So you hire one of them and then you have to send them off to a driving school to be trained. That's a great example of how the Canada-Ontario Jobs Grant might work together with you, with your business model. Understand it's a recovery based on the number of employees you have and the costs you incur related to third-party training of those new employees. And here is a really interesting program that I've only got one slide, but we'll spend a bit more time on this one. It is, we're in the fourth category now, everybody, the export market program. So the idea here is that we're going to sell things internationally, and in particular, sorry, this is called Can Export, just to be clear, but the idea is that you're going to try to develop markets for your customers or for your business overseas. So there are some thresholds, and these thresholds are variable. They tend to change. It's traditionally required you to have revenues of $100,000 to apply, and or up to 5 employees. I want to stress that the program's recently relaunched. I think that those are going to change. And for First Nations peoples and some woman-led businesses, and during COVID-19, all of these numbers have been lower. So don't be discouraged by the sales and employee count numbers entirely. You can look at Can Export in detail to see if it's a fit for your business, but there's a little barrier to entry for early stage startups. You have to have an established business. But once you do, it's a grant covering 50% of your project costs to expand to a new country. So think of the costs you would incur going to trade shows, meeting new distributors, forming new contracts in a different language, hiring lawyers or tax professionals to help you with this expansion, traveling overseas to meet and develop the market. All of these costs are eligible costs, and it's a 50% recovery, up to $50,000 per application per destination. And for big countries like China, India, and the United States, they're carved up into subsections. So you might be developing business in the southern US. So 50% of your trade show costs, marketing costs, other IP and tax costs can be covered by this. And I don't want to bury the lead there. I did say IP. So imagine you're expanding to another country. You haven't filed trademarks, or you haven't gotten that patent in yet in that country. 50% of those patent costs might be picked up related to your expansion to do business in a new country. So don't sleep on the Can Export program. Once you're an operating business, you might be making many Can Export applications as you expand successively to market or bring your products to specific markets in new countries you're not doing significant business in before. Now, one thing that holds people up is you might sell your product online. So let's say that you have 4 customers from South Africa just because you're a SaaS business company, and although you never marketed there, they just happen to sign up. Well, that's below a threshold that the Can Export government agency sets. So you likely can still apply to get subsidies to develop business in South Africa. On the other hand, if 30% of your business comes from the southern US, you can't apply anymore to expand in the southern US. This is the idea of opening up new markets. And I'll say that Can Export's one of many programs that go along with this. There's trade commissioners who organize trips you can talk to, as well as Going Global, another funding program if you're looking for partners overseas to work together. And OCI and others have all sorts of other programs to match this business expansion. Again, Ontario Centres of Innovation is going to have another presentation soon. I want to stress they have really interesting hiring, academic collaboration, and investment matching programs we're going to talk about. Thanks for bearing with me so far. Why some companies succeed and others fail in their grant applications. We're getting towards the end here, everybody. I want to come back to this concept of TRL. Everybody remembers this idea, how mature is the technology and what are the risks? I'm not sure that you fully digested the meaning here because I focused on technology risk being high, early, and declining. But now we have to think about what are financial and market risks and how do they affect my grant applications. And I have news for you, they absolutely do. If you look at the bottom of this chart, in levels 5, 6, and 7, equal weight is given to technology, finance, and market risks. And what that means is that if you're an early stage business applying for TRL level numbers that are low, no one really cares how much money you have or how many customers you have. I'm going to go back to that slide. Let's look again. When we're an early stage business, no one really cares about how much money you have or what your addressable market is or what customers you have. TRLs 1 through 3, a little bit of financial interest, mostly a technology focus. If I jump over to this slide, you'll see this red section here, and I've got valley of death written. And the graph is revenue and time. That means that every day you operate as an early stage startup that doesn't have sales, you're losing money. Even when you have sales, you might be losing money, and at some point you'll get to a break-even point. In the revenue time graph here, what this means is that you're just at the bottom of the valley. You've spent money to get to a break-even operating condition, and then later you'll start to make money. This starts to pick up, everybody. This means that every day that operates, you're making more money. That's what the upward trending graph means. Instead of your bank account going down, your bank account goes up over time. So what I'm trying to do with the color coding here is show you in red, you can be losing money and still get government funding for early stage R&D. However, as you approach things like CAN export, there is an expectation that you're a profitable and operating business. And that starts to pick up with this color coding that roughly matches the TRL scale. So if you're trying to hire new employees or apply for business expansion and your business has no sales and looks like it's going to go bankrupt in 2 months, your applications may not be successful. And that's because the government wants to pick winners, businesses that are viable or approaching viability for every point along that TRL scale. So early on, they focus on, are you the right people to do this technology research? Do you have a unique background? Later on, they say, do you have the staff and operations, and will you be there in order to train these new interns? And even later on, they'll say, do you have a viable business in Canada? We want to expand to South Africa. Business viability becomes more and more important over time. So you may have to stack many different applications. You can see programs on the left, time on the right, together. And for certain products, you may be able to access early stage R&D funding. But generally speaking, as a business, there will be a progression away from red, early stage R&D funding, towards green, commercialization funding for any given product or service. Now, I know you might have 2 products, but generally speaking, a startup goes through a maturity model, progressing from numbers 1 through 9 over a number of years, such that they don't apply for TRL levels 1 and 2 and 3 for the same product again. Instead, that product or process matures to become a commercial product. And as you mature to become a commercial product, the viability of your business becomes more and more of interest. And many people underestimate that in the end, the government's a lot like an investor. It wants a high ROI and it wants to invest in a business that'll be here next year. Next up, oh, my apologies, a bit of a silly graphic. When you're writing grants and incentive applications, I want to point out that what you write can and will be used against you. It will bite you in the ass, per se. What people don't realize is that there are more applicants than recipients of funding. You think of pitching VCs, you have a 1 in 200 or 1 in 2,000 chance to succeed. Well, pitching people like Ontario Centers of Excellence, they have wonderful programs that have 11% success rates. Now, 11% might seem depressing to you as an applicant, but again, is incredibly high compared to the chance of you pitching an angel investor. So Ontario Centers of Innovation, might be a great person to talk to because 11% is actually high. And once you accept that writing a grant proposal with an 11% chance of success is high, then you understand that there are more applicants than money to be given out. And so the first stage for OCI in evaluating applications is a screening procedure. Is the application complete? Does it mention any obviously ineligible activities? So the first step in grant proposal writing is to make sure you do no harm in your application. It should be on point and focused on what people need to hear, and it shouldn't contain extraneous details that they don't want to see. That's because the best value you can get is actually getting through that initial screening so that you get to merit-based evaluation. And many companies find that they are down-screened by mentioning the wrong things. Great link to the OCI event session. You can talk to them more. And everybody, we are wrapping close to the end of the deck here. I'm going to say that generally speaking, a big change happened in 2018 in the budget. The government announced that there were programs for bigger businesses, and some programs that traditionally dealt with startups were repositioning up. And so understand that the Trade Commissioner Service, while it's there for some startups, is really focused on businesses that are looking at much bigger projects. The Strategic Innovation Fund you may have heard about is really looking for multi-million-dollar projects to fund them. Even the IRAP, Industrial Research Assistance Program, it's never really been startup friendly per se, but it was friendly to early stage businesses. And increasingly it's scaling up to be larger. And regional development agencies, sources of funding and debt, are also being asked to refocus on larger businesses. And so this is a trend that's been going on for a number of years. As you use that website to identify different funding sources, do consider putting in the dollar filters. It may simply be a program that's looking for a business larger than yours. So don't apply for $40 million from the Strategic Innovation Fund unless you regularly spend $5 to $10 million a year. That makes sense to everybody? So you have to match the size of business with the size of funding you're looking for. I mentioned those regional development agencies. They're a great one to reach out to here. Most of the applicants are going to talk to FedDev Ontario, perhaps another organization called SOFI. They're spread all around the country, and generally speaking, they're a good source once you become a more established business. Thank you for your time. We're getting close to the end of the deck. I think that we'll take some more questions and make it a free-for-all, everybody. I see some people have raised their hands, so I will move my slides forward a few, everybody, and stop the screen share, but I may bring it back up to share specific decks. Reza, you think you have your hand raised? Do you want to go ahead?
Yes, I'm sorry. Can you hear me, Rick?
Yes, I can.
I'm sorry, my laptop has a problem actually, but now I can ask my question. Actually, my question was regarding filling the application forms for SR&ED program. Mm-hmm. I would like to know if I follow the instruction, if I fill all the form, is it possible that we go through each other, because it is the first time I'm submitting this form, so I'm still not quite sure if everything is fine. So I would like to just somebody with good experience just double check if everything is fine. Is it possible for you or your colleagues?
Yes. Yes, you can hire us to prepare, edit, or advise on these programs. So the short answer is, if you're asking, can you hire me to give you 2 hours of advice on your application? Absolutely. If you're a member of Innovation Factory, I'll say again, we can do office hours, and I would recommend that you instead enjoy the free time that might be available if you're an Innovation Factory member, or any of the other regional innovation centers. We volunteer at a couple others, but specifically Innovation Factory.
Thank you. Thank you.
Let's so that was a good question about R&D tax credit forms. Everybody, I'm sorry to do the seizure. I'll jump ahead to look at some of those forms. Again, I want to stress that if you're making a claim, you should have a timeline built and evidence to corroborate what happens. That evidence gets transformed into an essay answer. The government has specific questions they ask you. But again, the working notes, you don't file the timeline or the evidence, you just file the essay answer, but it has to be evidence-based. And then you also need to disclose that you have certain types of evidence. The more of these boxes you can check, the lower risk that the government perceives. Yes, and thank you. I'd like Innovation Factory to share my info and coordinate any office hour requests. We can absolutely accommodate. They can be virtual office hours, everybody. You can meet with me on Zoom. Doesn't have to be in person if you're not comfortable with that. Any other questions coming up? It's on. If there's no more questions, I'm going to ask Peter, come off mute and correct me. I don't know how many mistakes I made, but this is your chance to hold me accountable, Peter. In a second, I'm going to answer one more about what about in Quebec. Quebec has many different programs. It's one of the most lucrative provinces to do R&D. Really quickly, they have an e-business tax credit. So just doing certain types of business electronically might entitle you to funding there. That's doesn't mean you have to be doing R&D that qualifies in the sense of experiments and analysis. You just have to be spending money on developing e-business products. They have, like many other provinces, Ontario included, they have multimedia subsidies. So if you're building video games, movies, TV shows, things like that, we should also talk. There's tax credits and funding programs for those industries specifically. I didn't cover today. Quebec has a lot of those. Quebec also has a very lucrative tax credit claim, a matching program for federal R&D tax credits. It's a little complicated. Emanuela, we should probably talk about that because there's
threshold.
It's a little complex there. Peter, any mistakes I made, things I overlooked?
No, I mean, just on that point, I guess, about Quebec, I mean, all the not all the provinces, but many of the provinces have additional tax credits, in addition to the federal, and Ontario included, assuming we have a lot of Ontario people here, but other provinces have that as well. Some provinces require you have a permanent establishment in that province to take advantage of the tax credit. Others, like Quebec, don't actually need that. So if you're hiring contractors in Quebec, for instance, out of Ontario, you may be eligible for additional credits out of Quebec. So.
A question here, I think, coming to Canada from the UK for a fashion tech company. Do I have any suggestions the best way to do this? Yep, startup visas, absolutely a program you should talk about. There, even if startup visa doesn't work for you perfectly, you should be aware that if you're coming to Canada and starting a business, working with immigration lawyer, and BDO does have some of these services as well, should help with your residency application. So if you're coming here with an investment to start a business, 100% startup visa first. If that doesn't make sense, still make sure anybody you talk to understands you're coming here to start a tech company. And fashion tech specifically, Innovation Factory is amazing, but there is a university that has a fashion tech related program specifically you need to be aware of, if only to monitor your competitors. And that's, I believe, based out of Ryerson, but stay in touch with Innovation Factory to go through these programs and others. Peter, we might be done 5 minutes early. It was a long session. Thanks everybody for joining. Last chance, okay. Well, I'll take my slide deck away. Again, I hope this added some value to everybody.
Thank you so much, Rick. It's a great session. I've noted a few times, but I will send out the recording as well as Rick's information to everyone that was here. And if you have any further questions, I saw there was one more in there. So feel free to reply back when you see my follow-up email, and I will try to help you out and point you in the right direction. Okay, so thank you everyone for coming out today. And hopefully we'll see you at another IF session soon. Thanks, everyone. Have a good afternoon.